is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, noon till 1 p.m. 877-927-6648 is the number to call. The Dow is up 388 at 24,758. Real nice move to the upside after that early morning huge rally yesterday and huge pullback. So this is very nice. But we've just seen, where are we? Look, we're just a tiny little green candle when you're looking at this whole pattern, but it's a big move on the day. Up 1.58%. The S&P is up 1.60%, and that 0.60% is right now trading on the S&P at 2679.73, up 42, almost 43 points. And that is really that's very good because it's over the 9-period moving average, but it has to go to 2687 to get to the 14-period moving average. This whippiness in the H pattern that goes to a lowercase m pattern, trying its best to make another cup formation. We'll see what happens. A couple of things are going on. We'll talk about them as we move through the show. The QQQs, NDX 100 trading vehicle, the market vectors. No, it's not the market vectors after all this time. I should have known what it's called. Excuse me. This is called the Invesco QQQ Trust Series. They changed the name. I don't know if it was bought out, but whatever it is, Invesco QQ Trust Series. Trading up 3.44 at 167.05. This is up 2.09%. So we're fortunate. We have been long. Our stops held yesterday. We have two positions in the 3 times long Qs. It's just a trade as far as I can see, but this did not take out the 13th of November low of 157.13 on the 3 days ago when it pulled back so sharply after hitting the Chapman wave inside track. Remember, these are all proprietary techniques that I've developed over the years. I do talk about them, but they're what I've developed. It's called the Chapman wave inside track. Let me just move this so that you can see it. Okay. From the all-time high of 187.53 on the 1st of October to the recent high of I should type that in, 173.31. Let me write that in because it's going to become very important. 173.31. End of November. Then there was a sharp pullback, and that pullback never took out the left side low. So there's a cup formation that's already forming. Think of it. I hate to do this because it has other connotations. We don't have to get to those connotations until the Qs can get to 167. Really has to get to 169.50, 170.25, somewhere around there. Then we can start talking about an inverse head and shoulders. We've just seen so many of these things that have failed. Look, there was one here, failed. There was one here. It's not one of my favorite techniques. I prefer other things that allow you to have the confirmation, because when you break the neckline, that's where you want to already be in the trade. You want to be looking at it because that's often where it breaks down yet again. So it's a technique I've developed. You see the green line here says that we could, if the Qs close above 170.50, that's very good. It's above the trend line, the green one. If it stalls between the red one, which is at 167, let's call it 167 to 116. Yeah, let's just call it one. Let me just go through this again. It depends when. That's the whole thing. Let's call it 168.70. If it goes above there, but then it stalls underneath 170, once again, it's back in the repellent zone. It'll be coming down. It has to snap through it. The MACD is deflected higher, which is good. Stochastic is at 39%. That's really not good. It's really the weekly chart that is just horrible. The MACD is trying to slowly have the histogram, the vertical lines that essentially tell you the difference between the two moving averages getting narrower. That's good. Stochastic has turned around, so is the on-balance volume, but the stochastic still at 24%. That's really not very good. So a lot has to happen to make this pattern similar to the chart pattern we're looking at in the Dow. Let's just go to show you the two rectangles. I don't want to really talk about that now. Just there's so much to do other than to say these rectangles contain the price once, and I said they'd contain the price twice, and this is what we've done. So keep that in mind. It's the H pattern within that rectangle. Let's go to the IWM. IWM is trading right now at, let me just see, it's at 146.12. It's up 267, up 1.86%, kind of in line with the others, except that the NASDAQ is leading. This is just a horrible pattern. This is really a pattern that says, wow, until the Russell 2000 is able to trade in the 153 to 156 area in the next month and a half, 6 weeks, let's say. This is just not a great pattern. Yes, it did hold a monthly chart, dashed green line. Big deal. It's still, the month is young. We aren't even halfway into the month yet. Now I want to go to gold because this is going to be very important. Gold right now is up 3.5 at 1250.80. It's under the 200 period moving average in the daily of 1258.50. It has made a peak D, but here's the big difference is that the GDX, which is the gold miners ETF, has still to make a leg D above 20 point. Did I not write that? No, above 20.55. I better type that in because tomorrow I'll have to say it again and check it out. 20.55 for leg D. And what's even more important about this is that the GDX has gone to a leg B in the weekly. No, I think I've missed something. Let me just double check that. Ooh. That would be interesting. That could be C, which would match. Give me 1 second. There we go. 18 and 19.11 and 19.11. Oh, it was parallel. That's why I didn't do it. So it's leg B in the weekly. But wait a minute. Look at the gold weekly. The gold has just had a steady series of higher highs and higher lows, all within, if you look at this down move that went from the 1390s down to the low of 1167. 1390, how could that be? 1390s to 1167. We've just made a series of higher highs and higher lows. Very nice pattern, but not a very strong pattern. And it's suggesting that gold is still within a range that until gold can really get to the third. Let's just be a little cautious. Let's say 1268 to 1273 level. Just kind of break from this uptrend resistance line. 12, yeah, it really needs to get nicely above it. That would be important because at any point it could start to pull back a little bit. Doesn't have to be much. If you look at, so gold is up 3.5 at 1250.70. This is a continuous contract, and silver continuous contract is up 0.23. It's trying its best to make a lowercase h that goes to a lowercase m, and it's a leg C in the daily chart within a range. I've said for a long time, if silver starts to trade in the 1525, let's call it 1530s, for 2 out of 3 sessions, I'm going to be very impressed. That's what's needed. And we'll go to the dollar as we're about to wrap up. The dollar right now is down 45.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I've always, a bunch of really good questions came in. Let me just deal with this. Our first question is, would I show the E-mini, the December E-mini 120-minute chart? Yes, we all have legs C at this particular point. I've got this at 2678. MACD is good. Stochastic is very good at 84%. And most important about this is you see the cup, the big bowl formation as well, the little cup formation. You see this trend line here. This is suggesting that between 2678 and the 200-period exponential moving average, which has been a fantastic repellent line. Remember, I use repellent. I did Larry's show this morning at 9 o'clock Eastern time. Larry's traveling today. So I thought it would be a good opportunity just to go through some of these things in a little more detail in the futures. What I'd say is that everyone has different techniques. Larry uses uses Fibonacci as well as the Gartley formations just fantastically. He doesn't necessarily need to use moving averages. I love moving averages, and I only use them when I need them. See the way the price has been walking all day. It's been walking both the 9, the green line, and the black line, the 9 and the 14-period moving averages. But now this 200-period moving average, which was resistance way back in November the 28th, then it became support, then it got broken up to the upside to 28.14, then it came down. And look at the magnetic aspect of this 200-period moving average, this orange line. It became tremendous resistance once it got broken, around about the 5th of December, pulls back to 26.21, and then rebounds to 26.99, and then struggles at the 200-period moving average and pulls back again to the 25.83 low of just a couple of days ago. And then it goes to 28.678 round number high overnight. Then it pulls back again and getting closer and closer to the 200-period moving average. So in this area within, I'd say 10 points, going to be really important what happens in the next 10 points. Can this time it hold and treat this 200-period moving average as support for the first time since it broke down back from the 4th of December? Or is it going to once again become a repellent? So let's keep that in mind. Meantime, let's get out of this and let's go to the question I had. First question I had was, SMHs, time to short? No, I actually like the SMHs. As you know, I said I wasn't going to go along the SMHs because we have a very good position in the in the 3 times long Qs, and that kind of covers everything that I wanted, covers the stocks that I loved. And I said, let's just go with the ETF for now because it's a little dangerous with these stocks. They're working well and then they get clobbered intraday. I just don't need that. After this, there could be a big move in the stocks. After this, I mean, just this little phase right now, maybe the next 3 sessions to a week, we'll see. In the meantime, back at the ranch, the question next, so I like it for just the short term. I do believe that SMHs are going to be on my list to reshort. I think they've got major problems looking out into the first quarter. We've already seen that for almost a year now since the March high in the SMHs. So, yep, I just didn't think it was worth a trade because we've already got positions on. So just have patience. I hope we're correct, but I think we're going to have a chance to short the semis one more again. Next question I had, big, bold writing was, can I find it? Yes. Paul, why do you never mention the inverted yield curve? Do you think it's not important? So, Paul, I think it's absolutely, I've been talking about this for I don't know how long. I've been talking about the yields. Let's just go to the TLT and I'll show you something interesting. TLT right now is down 34 cents, 118.54. It is making a peak F in my work. Yeah, it could be an alternate count, but just for now, I'm satisfied calling it an F with 2 doji candles. Today's the 3rd doji candle. I think that it's going to be pulling back a little bit, but that whole yield curve thing, you've got months when you finally identify that there is a flip. And probably speaking to Dave White earlier on, and he was mentioning, and I agree with him, it's not the 2 under the 5 or the 5 under the 2, whatever, whenever you get the inversion, it's the 10. You want the bigger. That is now not worth it because the shorter term is doing better. Why would people even bother? So that's the issue. So you got time. I will absolutely talk about it. I think I spent 20 minutes or more on it last week. So maybe earlier this week, but no, I think it is important. But, you know, I don't think it's necessary to actually worry about it right now. We've got plenty of other things to worry about. Boeing, usual question, Boeing, very important. Up 8 at 330. I think it's in a trading band. I still don't think it's worth a buy. I think it's going to be a buy later. Maybe within the next 6 weeks, it'll give a real good buy signal, but I'm just going to have patience to wait. Next question is, I just did the TLT. I wanted to talk crude oil. Crude oil right now is up 34 cents. Nothing to see yet, but my suspicion is that there's a little bit, let me just draw it in for you. Now, where would I put it? I'd have to start it right here. You see what we've got here is we've probably got an inverted stalk leg formation. I don't think it needs one more spike to the downside. It could get it, doesn't necessarily need it. Because I think that this oval is going to turn into a cup formation if 2 things happen. One is so now it's Wednesday. I would have said Friday, but I'm going to have to go with Monday. I'm going to give it 4 full sessions, 4.5. If by Monday, crude oil is trading above 55, I would prefer to see it close at least 2 out of 3 days. It might mean we have to go to Tuesday above 55. Then I will tell you, I think we've started a pretty nice bounce. I'm only calling it a bounce in crude oil. If it takes out the low that was made, now it's 2 weeks ago, and that would be at 49.41. Let me just type that in so I don't have to keep on going through that. It's 49.41. A close below 49.30 would suggest to me that crude oil has very limited upside, and this whole trading band could continue quite a lot longer with lower highs and lower lows. I think it's the other way around. Over a 6-week period, I would not be surprised if we're getting close to slightly higher highs and slightly higher lows. That's just the way we're looking at it. So the next question came about, would I look at the OIH, the oil service? Don't type it there. Type it in the little box, the little rectangle right there. OIH, it was up a lot more. Now it's only up 44 cents. I shouldn't say a lot. It was up 2.71% is big when you're at a $16.50 stock. This is a start of something that I'm thinking has a chance based on the candle. I'm anticipating that the weekly candle is telling me there's just a chance that we don't take out the low this week of 16, round number 16. And if there is any chance of getting close to the 1705 level, then the 1722 9-period moving average becomes a magnet. So I think we're real close to at least a little bit of a bounce. And I'm even going to draw this in more as a rectangle formation than anything else right there. I'll put it in, and that's oil service, the S&P oil service sector.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
About the charts that I showed during the break and during the show, what about them? Do I notate them all the time? Yeah, I've been doing this for years and years, decades actually. Every time I'm free, even if I'm not trading, I'll be doing a charting. I'll be doing my Chapman Wave methodology. I'll be doing my notation. One of the reasons I don't, I probably am getting close to where I think it'll be. I've built up enough knowledge now to know how I can program the alternate counts. that I might be getting back to thinking of doing this as an automated program. But one of the reasons why I like to do it by hand is it doesn't take me more than, you can see, it just takes me quick enough to just type that I want to hit the lettering right here. It's text, right? And then I just type the letter and I'm done. And next one, the next one. But you see here, I've got let me just open this up a little wider. You see that there was a peak D. And then, yes, there was an A and a B and a C. But then look what happened. It took out that left side low. You take that left side low, you're negating everything. You have to start over again. Well, there was just one huge move to the upside. It was post the opening. Well, that's where you get your aberrations in the news event. So this goes in a single leg, like a single leg A failure. This is a leg E, because it was above the D and didn't break down below the start of the buy mode. So that becomes what I call, it's like a rogue wave, or in this particular instance, I call it the right arm extension. Just like you have a right arm, may I leave the room? That kind of right arm extension. And then it fails, because look, the MACD turned around, stochastic only went above for a short period, then way below 80%. And then it came back to a trough G. But that 200 period moving average, these are the things that I teach all the time. And I show subscribers to my opening call how we're working it, what we're doing. I show every single day the notation of the Chapman wave within the context of the Dow and the Dow 120, the Dow and the Dow 120-minute charts, as well as anything else we might have positions in. What's really important here is this. Look, I got a red C. How did I get that red C? I have a technique that I developed that says to me, there's something called the phantom C. And if I was looking for a C here and then waiting for the D, I would have seen this thing, the E-mini go from 267750 down to 266475. I don't usually have that when I'm trading short term. I'm not going to have that kind of a stop. It's a real tight stop. So this way, I was prepared. I said, hey, there's a phantom peak because of the technique I've developed. I put it in red, and then I go blue D. I'm ready. A doji candle, the MACD is still rallying, and then it turns around right at D. Stochastic goes back under 80%. Those are the techniques that I love to use. Then what does it do? It hits the 200 period moving average, this light blue line. When you need it, I didn't need it here. I do need it here. And it hit it again, a rising trend line, a rising price, doji candle, V-shaped bottom in the stochastic. MACD turns around and goes peak A, B, C, D. Boom, turns around again at D, and it goes, pulls back sharply. Then this one I would have almost, I wasn't trading because I was getting ready for the show. I was actually talking to Dave, so I didn't have a chance to do anything just as well. Because if I thought, okay, it's going down deeper because the MACD is still weak and the stochastic is still weak, all of a sudden you get your turnaround. And when there was that double top right there, it looked like a Chapman wave drop bucket or the double top U-shaped pattern. And then it pulled back. But then what happens is this rogue wave that goes leg E, peak E, and then it pulls back sharply. And fourth highest peak D is where we're always looking for something else to, anything can happen at D. And look what's happened. We've gone sideways in a trading band for a little while. We've broken this key support level right here, but not on on a closing basis once. This is very important. And then you've got this important moving average, trend line right here. I've just got a lot of programs up at this point, so it's a little bit slow. This one here says, any close under 2677, look for 2674s next. Then 2670, the 200 period moving average again. Doesn't say it's going to do it, but it's saying the technicals are really struggling here. Watch this closely. All right, enough with that. So now I want to go back to our story. And our story is, the next question came in. Let's see. It was a good question. I can't find it right now. Oh, here it is. Dow range bound to continue into June 2019. So that's a really good question. I hope to deal with that over the next week. In a sense, I've already dealt with it. I've shown you here in the den and live in my show this particular chart right here. And this particular chart is a monthly chart of the Dow. And basically what it's saying is the technicals have started to fail in the monthly chart of the Dow, the MACD and the stochastic. It is still in this up channel trend line. Everything about it is suggesting that it should make lower lows and lower highs in the monthly at least 1 or 2 more months. And then we could get a really good turnaround. Do we hang on until January, like that long weekend that's often a harbinger on the 1st? This time I don't think it's a Tuesday, right? So it's not over the long weekend. But is that right? Is it the 1st? Or I just said something, I better just check it out, because you know that things get calendar. Calendar is December the 31st is Monday. So Tuesday is the 1st. Oh, yeah, it is a long weekend. Okay, very good. So here's the question. Is it one of those long weekend tops in the market where the Dow starts another? You remember January of last year, but it was late January that it happened. But is January a turnaround month to the downside? Or will we already be going down and it's starting to form a base so that within 6 weeks after the January opening, we start to make some kind of support level? And do we get to the 22,000s, this key support right here? First of all, 23,300 is the first really important level. Then if we break that, is it the 22,000s that's next? That's really has to be monitored, because a break below that is really serious. I'm just going one step at a time. Let this counter trend rally unfold. Let it peter out. Let's see if we break the low of 23,881 that was made just about 8 sessions ago. And if it does get taken out, that's serious stuff. So that's what I'm looking at. Yes, I anticipate lower lows and lower highs. Yes, I anticipate that there's enough oversold condition here to allow for big spikes to the upside. Yes, the dollar's been spectacular. We're still long the dollar from the 6th of April, but I'm looking at the dollar and I'm saying, dollar, you're the one that's going to give us the most important information. You're down 41 cents. That's a big move to the downside today, not from where you've come, but it's just a big move on the day. Are you able to make that leg D above 97.69 in the weekly chart, and then we can see something to consolidation? Or have we already begun that, because the UUP is actually, that's the trading vehicle, is in leg E in the weekly chart. That's the one that we're long from 23s. It's at 25.95, hit 26 yesterday. I'll be right back. Dow's up 362. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, okay, real shaky news over in Great Britain, right, with May. I mean, I'm looking at May and I'm saying, hey, wait a minute. She doesn't want to admit it. Probably she's in the same situation as Trump, right? Anyway, bad news, bad news. The London stock market must have just taken a horrible hit. Oh, wait a minute. It's up 1.15. This is the Dow Jones UK stock market. It's up 1.17%, coming off the bottom that was made 5 days ago. Trying to go to the 200-period moving average in the weekly. Isn't that interesting? Oh, wait a minute. France. Didn't someone mention something about France? Wait a minute. Weren't there headlines all over the paper? Hey, well, wasn't there terrorism? Hey, as if you haven't got... I was once in Paris, just for my only 4 days ever in Paris, and I happened to be wearing a beret because that's kind of what artists did. Especially when you were younger. And besides the fact that I must have been the only one in the entire country wearing a beret, that French beret, I got there just as the gendarmes were beating the students over the head and throwing them into the trucks to take them down to the station. So now we're seeing the same sort of thing going on. Riots all over the show. Whoa, the Paris CAC 40 must be down. Oh, it must be terrible. Oh, wait a minute. It's up 2.38% today. Dow Jones, this is the EWQ, which is not the best. It isn't exactly the index, but it's giving me a good sign of what's going on. So the EWQ ETF is up 64 cents to 27.59. Like the London market, is a gap up island reversal. So we'll see where that goes. So you can't just listen to the news. Sometimes the market has a will of its own. So a question I had about, it says CAC 40 is up 2.2%. How do you reconcile with terror attack and problems every weekend? Whoops, where did it go? Weekend where business collapse on the Champs-Élysées. You know what? Markets sometimes get tired of the news and they just go about their business. And that's perhaps what we're seeing right now. Economically, the French economy doesn't look great. It doesn't look good at all on the chart. That's all I'm saying. Okay, next question was for the Dow back going to June. You know what? This particular piece that I'm looking at right now, this chart right now, suggests that it's really the next 6 weeks or so that is going to be real choppy. It could go longer. I'm just saying, I think the next 6 weeks, we get this oversold condition to an overbought short-term over condition in the next 3 days, maybe 5 days. Then we start pulling back. I think Santa is very slippery this year. He's sliding on the Grinch because this is going to be tough. So yes, you could get the double U formation in the monthly chart. And U formation sounds like some kind of medical term, but it's not. And it's a U formation, making one U here. And then I've got the chance of, you'll see it right here in the Dow chart, the monthly chart, of a second U being formed, so that we're using up more time than price because there's a rotational correction going on. So there's this first U, there's the second, so it makes a W formation. Technicals are very poor, so you got to be careful. That's the reason why the sharp downwards, look at all the red candles, but then look how it's counteracted by green candles, yet we've got lower lows and lower highs. And that's really the theme that we're looking at. Next question I had was, oh, in the den, there was a question here. Soybeans. Soybeans right now are trading up 4 3/4 at 9.19. No, sorry, 5. And you've gone to a leg E. Oh, this looks a little bit like, there you are, very nice. Looks like the dollar chart in the middle. 931.5 is the 200-period exponential moving average resistance in the daily, which is also a magnet. And the high today was 928. We're trading at 931.5 right now. I'm calling this leg E. I don't have any reason why not to call it leg E. And the MACD is good and stochastics at 84%. That weekly chart is like other commodities we're looking at, struggling very hard, but in a trading band. It really breaks out. Soy beans, continuous contract, trading at 919.75, really breaks out if it starts to hold. It can't just hit there at 938 to 942. If it gets there and then treats the 931 area, 200-period moving average as support, that's going to be really strong. Let's look at wheat. I haven't looked at wheat for a while. Does wheat? Let's see, peak D in the weekly chart over in the 624 area, plummets to 495, trading now at 528. So this is an A, a B, a C. The chart changes because it has A, B. So this is a D, and this is a peak E, and it's doing very nicely. So wheat is acting very nicely. Radio show NBEV. Let's go, NBEV. Oh, a lot of people just sent in. NBEV. NBEV is a new age. Hector, you told me all about this. I put it on my list, but I just wasn't looking at it as a current list. Bravo to Hector. He told us all here at TFNN. New age beverage core trading is 6.05, up 61 cents today, up 11.21%. He was telling us back in the 480s, I think it was. What does he say? You could do a little bragging here. I don't mind. Hi, Basil. If NBEV does break through $9 area, would you expect it to run out of juice? This is going to make a run as the Farm Bill becomes official. Thanks, Hector. Hector, you told us all about it. Bravo, you've really nailed this very well. It's making the U-shaped formation, the U formation. I have to make that a technical term. I'll have to put it into my glossary of terms. The U formation. Left side, right side. What is the time? Do we have time? I think I'd like to do this. Yes. So here we go. Chapman wave methodology. You draw the plumb line. There's the plumb line right there at the low that was made under 3 back around November the 14th. Okay, I haven't got time to go to the dates right now. Then you go to the most important candle now that you can identify. Well, first of all, looking from the left side to the right side, we're already there. We're probably one bar late. So the left side high of 750 to 760 back in about the 15th of October, that's the candle. But I first want to go to this candle here as the candle of importance. And that goes to there. And if I do a left side, right side price time match, you will see that we've already exceeded that in time. So it's old news. I only want new news. Look, yesterday was the day. Very nice, but yesterday was the day. So what I do is I say, okay, take a left side, right side price time match and go to areas of importance. So this would be the left side low that I have to take, and I have to put it into that candle right there. So that's saying, oh, I'm getting a good I'm going to do this during the break, and then we'll wrap it up with in the break. And another question, radio show question on Netflix. I did this in Larry's show earlier. It's the same thing. I'll do it again. I'll read it out for Mike, and we'll do it as soon as I get back. Basil Chapman, Tiger Technicians Hour. Dow's up 402. Good news. And S&P's up 43. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we got that 10-minute finally going to a leg D in the E-mini. Now, there's a whole bunch of questions came in. Here we go. So, Netflix, just a quick question. Is Netflix? Yes, I think Netflix can bounce here. The monthly chart suggests a hat-trick top. Netflix, I think, is going to have a tough time. I think lower lows and lower highs. So the question on Netflix is, you could do it as a trade if you want to get in here. I think the risk is now increased, but at 281.19, I'd have a 5-point stop. My target wouldn't be much more than 287 to 292. Finish back, go to Hector's question. Hector, here's your NBEV, NBEV, and it is trading right now at 611. I've got a left side, right side price target, which is today, which was the 6.50. Oh man, I got the wrong pointer there. The 6 point. Hey, come on. 6.65 level, the day's high is so far 628. It could go to tomorrow as well. You see the Chapman wave inside wedge target repellent line suggests that it could go to 655 within the next 2 days. So yes, it's acting really well. Now, the question is, if it breaks above 9, I would go one step at a time. I would say my first level of resistance is right here in the 750s. I'll talk about it again tomorrow. But yes, it's technicals have improved. It's doing very well. Next question I had was Kronos. Kronos, which I've been talking about for subscribers for a while. We missed an entry, then it spiked up, missed another entry, spiked up. So the question is, Michael wants to know, was it not Michael? The question is, oh, this is a telephone. Hi, Basil, can you pull up Cron? Where is an entry point? An entry point would be, it's at 12:36. They're all doing different things in different days, but they're all rallying. I'm going to say start a little bit here at 12:36. I would prefer to see it under 12, between 11.98 and 11.83. That's where I really would like to start the position, because I think there's a lot of support in the 11.30s. But tough to put stops in these things. So that's it. Maybe you want to nibble here and then add a little bit more later on, a little bit lower. But it looks like it should go to a leg D. Kronos, CRON, trading at 12.37, down 0.45. It should go to 13.96. And it should do that within about 5 or 6 sessions. So, okay. Hey, thanks for being here. Stay tuned for Steve Rhodes. And, of course, you've got Steve and you've got Dave. I'll be back tomorrow. Have a great day. And check out my opening call newsletter. Be up with you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.